Welcome to the VC Summit. We're very happy to have you for our Unicorn panel. We've gathered top-level panelists with us today to discuss about this 1 billion plus valued company with Virginie Morgon, CEO of EURAZEO, Philippe Botteri, partner with ACCEL, and David Thevenon is partner with SOFTBANK. So I suggest we start maybe with a big picture. There are roughly today 330 unicorns in the world. Last year, 120 companies joined that club. As we speak, 50% of unicorns are based in the US, but Europe has been clearly catching up over the past few years. So can you give us an insight of why is the momentum so good in Europe right now and why we should all be very enthusiastic about European unicorns?
Well, let me start with this. I think, so we announced this morning the raise of our sixth fund for Europe, which is a $575 million fund, and we have never been as excited about the geography as we have seen, as we are today. I mean, the reality is, if we look at the past 5 years, we have invested in 22 different cities. I mean, 22 different cities have generated what we think is going to be, and we may be wrong, but hopefully we'll be right, will be the next unicorn. And it is very exciting because if you look at 15 years back, a lot of the market was just based in London and Tel Aviv. And today we're seeing this huge momentum across all Europe. And that's what's going to give the strength and the volume that we need to really increase the number of unicorns that we're going to generate in the next few years.
So obviously there's more capital to be invested in European unicorns as we speak. Do you also think that European entrepreneurs are more ambitious today than they were before, and they, right from the beginning, set their sight on the international stage, so they need more money to grow and they scale up more quickly?
I mean, I think we all agree on the fact that we've been super strong in Europe to support startups and venture. There's been a number of players, super professional players in the industry investing at the early stage. But there wasn't so much investors in what we call growth capital. So I think altogether, the three of us, we believe that there's an enormous opportunity to support those entrepreneurs, European entrepreneurs you're mentioning, to go a number of steps forward, supporting them with growth capital. So at least EURAZEO, ACCEL, SOFTBANK, we all have enormous ambition in setting up the appropriate financial means to support growth capital, so we make sure that we can be the partners of reference across the sort of life cycle of the development of our partners and entrepreneurs. We all know they're super well trained, super well educated. We have amazing technologies, amazing engineers. There was a lot of lack of capital for a number of years for growth capital, which is coming now. And to your stats, I think this year, meaning 2018, about 2/3 of the new unicorns were Europeans. So that's a
very good momentum.
That's a very positive sign.
David, what's your view on that? Given that you obviously invest all over the world, how do you see this European stage now?
Well, 23 billion was invested last year in Europe. I think Europe created 17 or 18 unicorns last year. So we are very optimistic about the state of the EU tech scene, I would say. But more importantly, we are very excited about what we see and the promise of the ecosystem, I would say. We have global coverage, so we're meeting entrepreneurs everywhere. But we are seeing more and more entrepreneurs coming from Europe with big dreams, big ambition, bold visions, working on very interesting tech and user problems. And so we are very looking forward to help those entrepreneurs. Like Virginie was saying, there have been maybe a lack of growth capital in the past, but that's no more the case. There's more and more investors. And for sure, we're in business. So we're committed to invest more in Europe. We have another investment which will be announced like today or tomorrow in Germany. And we have invested in like many startups already. So we're looking forward to kind of meet more entrepreneurs.
And can I add just one thing? And for once, we can be pretty European in what we say because we actually mean it. I mean, you can invest in a German company, but you have to make sure that very rapidly that company develop in Europe. Even in the US, in parallel, I mean, there's a big change that we see, that those entrepreneurs are willing to be way more ambitious and take more risks to capture market share and capture market in parallel. So you are deemed to become European, being either born in France or in Germany or in the UK. So we have to make sure that they have appropriate partners to support their development, not on a country-by-country basis, but at least on a European-wide basis.
And just maybe one point I would add on this is that European startups right now, I mean, the ones that are succeeding the champion, they are growing faster than ever. I mean, thanks to the access to large amount of capital at a relatively early stage in the company. I mean, these companies are getting to scale in record time frame. I mean, just to give you an example, if you take a company called UiPath, which is in a robotic process automation, so they basically automate back office processes, which is a huge gain in productivity for enterprise. This is a company which started in Bucharest. They grew from $5 to $200 million in revenue within a couple of years, right? And they just announced a $500 million round at $7 billion valuation. I mean, this is what Europe can generate today.
The pace, the speed of growth.
Exactly.
Yeah.
Well, the speed of growth, the amount of capital they can raise. I mean, the kind of champion that are emerging from Europe right now, I think is very much at par with what we are seeing in the other regions.
So now we're finished with this big picture. Let's look at what you've got in your portfolio, because obviously all of you have invested in unicorns, whether earlier in their lives or at a later stage. If you shared with us what makes those companies so special, what explains that they grow so fast, what makes them these unicorns, what they help them run around of their peer group, why are they so special? Philippe, let's go.
Well, I'm happy to start. I mean,
and give us a couple of examples if you can.
Yeah, sure. So maybe I start with an example and we go on. I have many examples. One of the things that I think is very interesting when you look at successful unicorns is that they are very strategic in the way they're thinking and building their company as a platform, away from single product to building a platform. A platform is way better. It's able to build on the data you have, the relationship you have with your customers, to do more, to grow, and to grow with others as well. So a good example of that is a company we invested in Southeast Asia, which is called Grab. And they are the leader, I mean, they started as a leader of ride sharing in Southeast Asia. I mean, Southeast Asia is a big region. There's 750 million people living there. So they won that market, they became a leader, but they realized they could do much more for the customer, and they had the right mindset, the right infrastructure to be able to transform themselves over the years as a super app. So they're able to offer, like you have seen Uber offering in the US, like food, for example, last mile logistics. But also they went into payment because they realized they had to solve for their drivers and for the users in markets which are like cash economy, no credit card, impossible to open a bank account, etc. So their customer set and drivers initially were underserved in financial services. So they decided, because they were organized as a platform, it was very easy for them to launch Grab Financial Services, and now they are one of the leading, in fact, the leading financial platform in Southeast Asia. So that just shows like the ambition and the drive.
I mean, I think we would all agree on this. The first thing we look at is the management. And if we judge that the idea is can be supported and there's a market for that idea, I think the management, their capacity to execute is what convinced me when we have to take a decision. I think what David was describing here is also this capacity to evolve with your own business and make sure that either you capture more opportunities that arise as you grow, or that you change your model, which happens. So to be more specific, I mean, I remember meeting the founder of Farfetch, which was more recently IPO'd, and we, EURAZEO, invested in Farfetch after. And that was that meeting, which for me was the complete change of sort of view or mind with, so this guy called José Neves. I thought he had a complete mastering of the platform, so the technology, the delivery, the logistic of Farfetch, which is extremely complex. And I thought that his capacity to execute and his ambition was very impressive, unheard of. And after not so many years, that business has billions of GMV in sales, and is valued by the market and has been valued by the market for at least 6 or 7 months. That's nearly $9 billion, which, let's be honest, even surprises me as multiples. But there's growth, there's execution. So that's what I would say as a sort of simple answer, what we would be looking at immediately to make the judgment.
Philippe, what's your view on this?
Yeah, so I think I would echo what Virginie just said. I mean, to me, it really starts with the founder and the founding team. And
sorry, when you say that, when you both say that about management, can you maybe specify for the audience?
I'm not saying management, I'm saying founder.
Founders.
Which is different.
Well, let's start with
something you add after.
After you founded the company. But for the founders, how would you sort of pick up what their ability to execute and to grow? How do you see that in them? How do you see through these founders?
Well, I mean, I would say when you see it, you know it. I mean, for example, so we invested in early stage. So we led the Series A for Doctolib in France. The newest French unicorn. And I spent the first hour I spent with Stan, the CEO. I was like, you know what? Whatever he does, I want to invest. He was like so passionate about his vision. In this case, it was like he wanted to change healthcare in Europe. He was so passionate about it. He was so diligent about the way he wanted to execute on his vision. They were like, well, this is really someone I really want to back. So to me, that is something which is super important. And if you look at the biggest successes in tech, companies like Facebook, for example, where you see the founder is still at the helm of the company after all this period. And I don't think it is by chance that the best companies have their founders still in charge after, 15 years.
David, you want to ask?
Oh, sure, I can go on with example if you want.
Yes, if you have another example, I could outline anything.
Oh, sure. So another thing we share often with great entrepreneurs and great teams is a sense of urgency as well. So I think the right teams are able to understand when they have the right model, when they have the right business, and from them on, able to think, let's push the pedal, let's scale. And let's, if our stuff works, why hesitate? Let's not wait and let's make it big. And so those teams have real big ambition to do that. I mean, an example for that, and maybe Virginie has another one, is that we have a company in India called Oyo. They are like an hotel operator, for example. So they address the long tails of hotels, help them with tech, with branding, and to get visibility to get customers. They signed their Series A in 2015. They launched a business in 2013. And now they have more than 200,000 hotel rooms they are managing. They're shooting for 1 million in next year. And thanks to our capital and their thinking, they have expanded to China, they're expanding to the Middle East, the US, UK. Their model works everywhere. Why wait?
So there's one... Would you like to add something?
One more thing, building on David's comment, is that management, I think that's quite clear, that's essential. And then you could say the second thing is our judgment and the judgment of the founder and the management of their ability to scale. So it's either scale in one market because it's big enough, and I think Oyo operates a lot in China, which is sort of helping when you're successful, especially in hospitality, which I know a little bit of, or scale across geographies, scale transatlantically, go to the US in parallel. So I think a number of our companies, and I'd like to mention one thing which I love in this industry, in backing venture and growth companies, that we work together. In other industry, larger investment, large cap, we usually, and I'm talking about EURAZEO, we buy control and we are on our own.
You're sole investor, like for big deals, like LBO deals.
Bigger deals, you're sort of on your own. I mean, you can share, but I think in this industry, so we were reminding ourselves earlier, with Philippe that we have 2 companies in common today, and maybe another one that we are working on, which hopefully we can announce soon. So it's a very collaborative industry. We exercise judgment together. Because you were asking, how do you know? I mean, you know, we're not always right, but we know because we have judgment. And you exercise your judgment after so many years on an industry, an entrepreneur. But the scalability is super important. How deep is the market? How deep can you go? How quickly can you expand in other geographies? I mean, Doctolib was a good example.
BlaBlaCar is a very good example as well.
But many other even smaller, I mean, Content Square, which is marketing. We've expanded in the US as much as in Europe because they are the same clients. Your clients are the consumer clients, food, beverage, beauty. You want to follow your clients where they are as well.
So
yeah, so just maybe one thing I would add to this is that to me, so next to the founder, the second thing I'm looking for is really something about the company that is really exceptional. And that I've never seen anywhere else. And it can be, so just give you a few examples. If I take the case of Doctolib, this is how they executed on sales. Like their key was like, how do we get to 100,000 doctors very quickly? And they built a sales engine that I've never seen before. So that's one example. If I take the case of UiPath, I mean, the technologies that they're providing as such a strong ROI for the enterprise that, what should be a 12-month sales cycle, because when you're selling a 7-figure deals into a very large Fortune 500 companies and you're a small startup, it takes 12 months. With UiPath, it was done in 3 months. And you're like, wow, how can this happen, right? Like these are the exceptional things that, I'm trying to look for, and we tell you that something special is going to happen.
So once you've spotted them, there's one question we can take for the audience before moving on to the next subject. Where is the... I've lost the question, is not there anymore, but the idea was once you've invested in that, in those unicorns company, what do you bring to the table? How do you help them to grow even faster? What the kind of support do you provide them with?
Well, beyond the money, which is a start.
That's something.
But that's not enough. Beyond the money, I think we would all agree that we bring additional management competencies. Could be a management team, professional management team to help the founder. Could be CEO in the US to develop if it's a European company. So a lot of people expertise, I would say. And a lot of strategic thinking about where next, what next,
M&A,
how fast.
M&A support if need be?
Yeah, I mean, I don't know, under the control of my friends, I mean, I would say there's way less M&A in this stage of development. There's been, I mean, Doctolib, we've made one acquisition with Mon Docteur, but I see less M&A in that level of development than organic growth. I think it's more being, timely to market, hiring the right people, or commercial partnership as well, negotiating depending of, which businesses we're in, I guess.
Yeah, I think on our side, so we are early stage investor. We typically invest at the Series A, so the first $5, $10, $15 million investments into a company. And we do this from a global platform. So ACCEL has offices in Silicon Valley, London, and India. And it is that global network that we give to our portfolio companies. So that means when we invest, so we do a lot of software investments right now. Typically, software company needs to be in the US because for every $1 spent on software, 50 cents is spent in the US market. So we help the CEO relocate to New York or San Francisco and hire top management on the especially sales and marketing side. And that's what really makes a difference for these companies.
Yeah, so I will repeat the same thing. Capital, contact and connections, helping people to think bigger and expand internationally. So we help, like, for example, we work to launch in China. We help companies to launch in Latin America or some countries in Asia or in the US for some of them. Something else we're bringing is we are long-term capital in some way as well. Our fund is like 12 years. And so we think we are bringing to entrepreneurs the peace of mind of looking over at the horizon and thinking that they can deliver on the growth and the change in product and the innovation they want to develop. without thinking about, looking just in front of the boat at the wave going up and down. And so that's very important, in fact, for entrepreneurs. I think that peace of mind.
I think a lot of people underestimate or do not know how much operational support we bring to those companies. I mean, there's often an idea or a judgment which is untrue that we just bring capital, money, which of course is needed because we were talking about a lack of growth capital in Europe. So you need to make sure. Someone gave me a statistics, and I don't know whether you confirm that to reach $1 billion, sort of euro or dollars value to become a unicorn, on average, it's probably been an investment of partners like us of around 100 million. But putting that aside, it's a partnership with the founder, with the management team. It's a very operational collaboration between the VCs and the investors and the team. So it's sort of a daily partnership, talking about how to expand, even commercial inroads, negotiation with some clients, making sure that the right expansion is being done. It's a pretty intense job to be a partner of a small company growing, doubling its size every year.
We have 55 seconds left to address the last point. I really wanted to raise it. We've talked about growth, the growth rate of those unicorns company, but we must acknowledge that a lot of them are still unprofitable. Some argue that if they slow down on the growth front, they would make money. So what's your view as an investor on that unprofitable growth thing? Is this a problem?
Well, I think it just depends what you mean by profitable. I think in a lot of cases, these companies are profitable on a unit economics basis. Like if you acquire a customer and you break even within a year and you keep this customer for 5 years, yeah, I mean, you have to put 1 year of cost up front to acquire them. But if you were to stop any growth, then of course you'll be profitable. So that's one case where you may see in total companies not profitable, but actually the company is on a unit economics profitable. And then there are other businesses where profitability comes with scale, right? And you need to get to that scale before you see any profitability. And the question is, do you believe the company can get to that scale? And then when it gets to that scale, do you believe that the company can actually maintain that profitability, meaning that the company is building enough moats around its business model so that competitors that cannot go in, right? And I think what you see in ride sharing right now is that the moat is actually not that high. And so the question is, how do you build that moat over time?
Virginie, you're coming from the LBO universe before interesting and merging into that venture and growth business. Is that for you, profitable growth, something that you really care about?
Well, I have to confess I had to adapt a little bit to make sure I was supporting as much as I could the team investing in venture and growth, because that's very different sort of model of development than the one you have in much larger companies. However, I mean, I would tend to look at two things to say it's in the same way but differently than Philippe. I would look at a few KPIs and making sure that they're going in the right direction. Like customer acquisition costs, I mean, I would just make sure that this is going the right way with some form of scale. Pretty high up in the P&L, making sure that there is money made at some point as gross margin level. And also making sure that, yes, we're losing money in countries where we're building growth, but in the slightly more mature countries, maybe in the one where we were born or where they started, that company is starting to at least stabilize in terms of loss making. And overall, I think that gives us or not confidence that at some point we scale, you're reaching at least break even and one day profitability.
Interesting. David?
In fact, I really, there's so much great content. Emmanuelle,
just 5 seconds, so just he's going to give us an answer in 5 seconds. David, you're doing it. 5 seconds.
5 seconds. So
he
we
can do
always
it.
ask companies not to compromise on growth and scalability. I think it takes 14 years for Alibaba before they became profitable. So I think it's worth to build your moat, build your dominance on the market, and then push the profitability lever that you have built before, but you can wait before you push them.
4 seconds. Thank you very much to the panelists. Thank you.